Well, the Federal Reserve released the FOMC minutes for the meeting held in May, and let's talk about three key factors there. One is on inflation. They said that that is continuing to be elevated. Largely all members agreed that that is a challenge. They also see the risk of price increases, and they see this risk as quite high or elevated, and broadly all members agreed on that as well. Also, they are seeing commodity market risks, especially given the Ukraine war. So those 3 pointers on inflation. Moving quickly on to shrinking the balance sheet. Well, members believe that the Fed must shrink the balance sheet, and that largely should be done through allowing securities to mature. So that's the route in which they will continue to shrink the balance sheet. They said that with regard to mortgage-backed securities, largely that is the holding which they will continue to offload, and they will return to the Fed's holding primarily in treasuries. Moving quickly on to rate hikes, that's the key, right? A 50 bips rate hike is being considered over multiple meetings going forward. However, they are considering, or they've hinted at the possibility of a pause somewhere in the middle to reassess as to how the economy is absorbing all of these rate hikes and what's the impact of these rate hikes on the economy, because they don't want any kind of an adverse impact with regard to the economy. Also, they are looking at moving the stance to restrictive from neutral. So largely these are the key takeaways. Moving quickly on to how US markets reacted to this. Well, all three US indices reacted positively with gains. The Dow was up around 0.6%, the S&P 500 was up nearly 1%, up 0.95%, and the Nasdaq up 1.5% in trade yesterday. Definitely a bit of relief. Even US futures in early trade today are looking in the green. So definitely positivity coming through. Moving quickly on to how European indices closed. Well, Europe closed before the Fed released its minutes, but the DAX was up nonetheless, was up around 2/3%. The FTSE up over 0.5%, the CAC 40 up around 3/4%, and the Stock 600 also up around 2/3% or so. Moving quickly on to how Asia is looking. So despite a very good handover by the US, Asia is largely looking negative, other than the Kospi, which is up around 0.25%. The Nikkei is absolutely flat with a negative bias, up around 1/10%. Shanghai is down 0.5%. The Hang Seng is down over 1%, and the ASX 200 is down around 0.5% or so. So negative cues coming out of Asia. However, the SGX Nifty is trading in the green. It's trading positive. The SGX Nifty is up around 0.4% as we speak. So definitely positive cues coming out of that one. Moving quickly on to how commodities is looking. Well, oil prices continue to remain elevated above that $110 a barrel mark. Gold, nothing changes much despite that FOMC meeting. In fact, gold has come off yesterday. Gold came off a little bit. It's come to around that $1,850 an ounce, but not much of a change broadly. When we are looking at bond yields though, bond yields continue to be, or rather bonds and treasuries continue to be the go-to largely in the current environment, where equities is perceived as risky and there's large whipsaw in markets. So definitely everyone running towards treasuries, and currently the US 10-year treasury yields stand at around 2.77%. So they've come off, and they're continuing to come off as people continue to move towards treasuries, or continue to prefer treasuries, if I may term it that way. Moving quickly on to the dollar index. The dollar index has come off its high. It's come to around 102. Mind you, it had breached the 104 mark less than 3 weeks back. So clearly it's come off quite sharply after that, and that obviously also continues to fall into bond yields as well. So they've come off as well. So a couple of factors hurting bond yields. Moving lastly to crypto. Crypto is largely stable where we left it yesterday, with Bitcoin below that $30,000 mark. Broadly, a positive sentiment for Indian indices, but when we're looking at Asia as a whole, it's looking in very minor green or an alternating between green and red as we speak.